Is AST SPACEMOBILE a good company? Let's analyze it from both a business and an investment perspective. As a company, yes, AST SPACEMOBILE is widely considered an extremely innovative and potentially transformative company in the telecommunications and space industries. Pioneering technology. They are building the first ever global cellular broadband network that connects directly to standard, unmodified smartphones. This is a game-changing technology with the potential to disrupt the entire mobile connectivity landscape. Demonstrated success. The successful testing of their BlueWalker 3 prototype, including making the first space-based two-way phone calls and 4G, 5G connections to unmodified phones, validates their core technology. Strong strategic partnerships. They have secured crucial partnerships with major global mobile network operators like AT&T, Verizon, Vodafone, and Rakuten Mobile. These partnerships are vital as they provide access to existing spectrum and billions of subscribers, drastically reducing customer acquisition costs. Addressing a massive market, they are targeting the billions of people worldwide who lack reliable cellular broadband, as well as providing connectivity in remote areas at sea and for emergency services. This is an enormous untapped market. Government interest. Recent agreements with U.S. government prime contractors solidify their role as a critical infrastructure provider for national security, offering a stable and high-margin revenue stream. Intellectual property. They possess an extensive portfolio of patents and patent-pending claims, protecting their unique technological approach. As an investment, SPACEMOBILE is a higher-risk, higher-reward investment with significant potential, but also notable challenges. Immense growth potential. If they successfully deploy their constellation and achieve widespread commercial adoption, the revenue and profit potential are staggering. Analysts forecast massive revenue growth in the coming years, for example, 472% in the current quarter, 1,314% for the full fiscal year 2025, and over 400% annually over the next 5 years. Pre-revenue, early revenue stage. The company is currently investing heavily in building its satellite constellation and is only just beginning to generate significant revenue. Analysts expect first significant revenue $50 million to $75 million in the second half of 2025. Significant capital requirements. Building and launching a global satellite network requires enormous capital. The company frequently raises funds through offerings of stock and convertible notes, which can lead to share dilution concerns for investors. However, strategic financial management, including recent debt repurchases and non-dilutive financing, aims to mitigate these concerns. High valuation. The stock has seen a rapid increase in price, over 300% in the last 52 weeks as of July 2025. Reflecting the market's high expectations, this means a lot of future success is already priced in, making it volatile and sensitive to any delays or setbacks. While some analysts see it as undervalued based on future cash flows, others acknowledge its high price-to-book ratio. Execution risk. The biggest risks are no longer solely financial, but physical and operational. Satellite manufacturing is complex. Any launch failures or significant delays in deployment could impact timelines and investor confidence. Regulatory hurdles and concerns from astronomers about light pollution or radio interference are also factors. Competition. While their direct-to-device approach is unique, they face competition from other satellite providers like Starlink SpaceX, which is also developing direct-to-cell capabilities, although currently more limited to texting. In summary, AST SPACEMOBILE is a visionary company with groundbreaking technology and strategic partnerships that position it for potentially massive success. However, as an investment, it requires a high tolerance for risk, a long-term investment horizon, and a belief in the company's ability to execute on its ambitious and capital-intensive plan to build out its global network and achieve profitability.
Okay, let's go.